Welcome to RANsquawk's EU morning briefing for Friday, the 29th of January 2010. Take a look around the markets. It continues to be dominated by the uncertainty surrounding the Greek economy and the peripheral spreads in the Eurozone. Overnight in Asia, partly saw their reaction to how they interpreted that news, where we did see the Nikkei finish down around 2% on the session. It did give JGBs a bit of a bid tone, but T-notes, they were the ones that ticked higher overnight in terms of the Asian session. That did see a turnabout though when the European markets came in. The front page of this morning's FT did basically suggest that the EU would contemplate as a last resort stepping in over Greece. That allied as well to some pretty similar comments coming out of the EU Commissioner Almunia has seen those spreads in terms of the Greek, the Portuguese and so on narrow quite considerably. At last check, the 10-year Greek Bund yield spread, that was around 15 to 20 basis points narrower from the 400 level, which was breached on the record high yesterday. That in turn means that UK and the FTSE, CAC and DAX in Europe are in positive territory, reversing some of the hefty losses from yesterday, up around 0.5% or so. In terms of other news flow for the US, overnight after the market closed, we did see Benjamin Bernanke. He got confirmed in the Senate with a vote of 70 to 30, so that has now been concluded. But looking ahead, much of the focus will be dominated and direction for the rest of the market trade by the GDP release to come from the US, while looking for a substantial increase in the Q4 advanced number. The current consensus analysts are looking for is 4.6% from a previous 2.2%.